A and B are partners. A's capital is 1 lakh. B's capital is 60,000. Interest is payable on capital at the rate of 6% per annum. So this is interest. B is entitled to a salary of 3,000 per month. Profit for the year before interest and salary to B is rupees 80,000. Prepare profit and loss appropriation account. So how would the profit and loss appropriation account be prepared? Appropriation account, if it's prepared like this, let us say we have a net profit. By net profit brought down, the amount of profit is 80,000. Interest is payable at the rate of 6% per annum. Let us say to interest on capital. How much would this be? A would get 6,000 and B would get 3,600. So to interest on capital. So where it would go to A's capital and B's capital. What would be the amounts? 6% on 1 lakh, 6,000, 6% on 60,000, 3,600. Next, B is entitled to a salary of 3,000 per month. So to salary, it's actually to salary, but it's going to B's capital account. On account of salary. So the entry is basically we are debiting profit and loss appropriation account, crediting the partner's capital account. Crediting the partner's capital account since this amount goes to the partner's capital. There is an increase in the partner's capital. So we credit the partner's capital account, profit and loss appropriation account debited because we are distributing these profits. What is B's salary? Is entitled to a salary of 3,000 per month. Therefore, into 12 months, we are talking of an amount of 36,000. That is all. Therefore, whatever is the balance becomes the profit, which would be distributed among the partners. What is their profit sharing ratio? They are partners. It is not mentioned anywhere. We only know the capital contribution. So profit sharing ratio, in the absence of an agreement, in the absence of any information here, we assume that the profit sharing ratio is equal. So let us see what is the balance that we have. This would be 80,000. Yeah. Less 36,000 and 9,600. I think we have 34,400 is the total profit balance. 34,400 if it's distributed equally. So to share of profit, A and B. A's capital, B's capital would be, let us say, 17,200 and 17,200. 34,400. This is how a profit and loss appropriation account would be made. This is the same problem. AB partners, A's capital 1 lakh, B's capital 60,000, interest 6% per annum. B is entitled to a salary of 3,000 per month. Profit for the year before interest and salary is so much. Prepare capital accounts. What would P's capital account look like? What would A's capital look like? What would B's capital account look like? So A's capital account, we can also prepare in a columnar form, separately or in a columnar form. If we prepare in a columnar form and I take capital accounts, and let us say we have B's capital and we have A's capital. Similarly, we have A's capital and we have B's capital. So what would this look like? the balance that they have is A has a capital of 1 lakh, B has a capital of 60,000. So this is the capital accounts. Now when profit is distributed, what happened? How was it distributed? They got interest. So by profit and loss appropriation account, on account of interest on capital. Interest on capital. What was the interest on capital? A got an interest of 6,000. So profit and loss account was debited. Now we are crediting the capital accounts for 6,000 and we got 3,600. Next, B got on account of salary. How much was B's salary? It was 36,000. Profit for the year and on account of profit. So basically these are just the entries by profit and loss appropriation account on account of interest on capital, on account of salaries, on account of profit. It was 17,200 and 17,200 since the total profit was 34,400. Now this becomes your balance in the capital accounts. That becomes 1,23,200 and we have 1,16,800. 1,16,800. This is to balance carried down. We would have 1,23,200 for A and 1,16,800 for B. This is what the capital accounts would look like after distribution of the profits. Let us look at the neater presentation of the same thing. Here we have on one page profit and loss appropriation account. Net profit was 80,000. Interest on capital 6,000 and 3,600. Salaries was 36,000 to B. Share of profit 17,200 and 17,200. This is how the profit and loss appropriation account was prepared. What does the partners capital account look like? They had a balance of 1 lakh. Interest on capital was credited to them. Profit and loss appropriation debit and partners capital account credit. Salary, profit and loss appropriation debit. Partners capital account, that's B's capital account credit. Share of profit to both 17,200, 17,200. So that the balance is 1,23,200 for A and 1,16,800 for